Imagine sending money across the globe in seconds, almost as easily as sending an email. Now, consider that most international transfers today still take days, involve layers of fees, and pass through a labyrinth of correspondent banks. This is the world that's SWIFT short for the Society for Worldwide Interbank Financial. Telecommunication has dominated for decades. SWIFT isn't a bank, but a messaging network connecting over 11,000 financial institutions in more than 200 countries. Its legacy is reliability. For over 50 years, it has formed the backbone of global finance, ensuring trillions of dollars move safely every day. Yet, as efficient as SWIFT has been, it wasn't built for the speed and transparency that modern business demands. Enter RippleNet, powered by XRP, pronounced Ripple. A blockchain-based network designed to solve exactly those inefficiencies. Unlike SWIFT, RippleNet settles transactions in near real time, often in under 4 seconds, with a single digital token bridging different currencies. Its goal is simple: make cross-border payments faster, cheaper, and more transparent. To some, it's revolutionary. To others, it's a disruption that threatens the status quo. Historically, international transfers relied on a chain of correspondent banks, each taking a cut and delaying settlement. A simple transfer from New York to Mumbai could involve 5 or 6 intermediaries, with costs adding up to 5 to 10% in fees. SWIFT provides the messaging layer for these banks to communicate securely, but does not handle the funds themselves. RippleNet, however, offers both a messaging system and a liquidity solution through XRP, reducing intermediaries and potentially cutting fees drastically. If we look at data, SWIFT handles about 42 million messages daily, representing over $6 trillion in value. RippleNet, still relatively small, has grown rapidly. With hundreds of banks and financial institutions experimenting with it, while SWIFT's infrastructure is rock solid, RippleNet's speed and efficiency cannot be ignored. This is where the debate gets intriguing. Do you stick with a trusted system that works but is slow and costly? Or embrace a newer, faster, and potentially riskier technology? Many financial leaders are cautiously exploring RippleNet while maintaining SWIFT connections, essentially hedging their bets on the future of money. If this comparison is interesting, hit that like button. And just as a teaser, in the next segment, we'll dive into the technical strengths and weaknesses of both networks, uncovering why some banks see RippleNet as the ultimate solution, while others remain skeptical. To understand why banks and financial institutions are so divided, we need to examine the technical strengths and weaknesses of SWIFT and RippleNet. Let's start with SWIFT. Its main strength lies in its sheer scale and established trust. SWIFT messages are standardized, encrypted, and highly secure, which has kept global finance running smoothly for decades. The network's governance is also stable, overseen by member banks with clear protocols for compliance, anti-money laundering, and fraud prevention. Yet, despite these advantages, SWIFT was designed in the 1970s. Its infrastructure relies on batch processing, which means payments are often delayed, sometimes taking 2 to 5 business days for full settlement. Additionally, each transaction can pass through multiple correspondent banks, each adding fees and increasing complexity. RippleNet approaches the problem differently. By leveraging blockchain technology, it provides real-time settlement and end-to-end transparency. Transactions using XRP as a bridge currency can bypass multiple intermediaries, cutting costs and reducing delays. RippleNet also allows for programmable features, like automatic currency conversion at competitive rates, making it attractive for corporates dealing with multiple currencies. On the flip side, RippleNet faces challenges of adoption and regulatory scrutiny. Blockchain-based systems are relatively new in traditional finance, and compliance with local laws can be tricky. Some critics point out that XRP, the digital asset, is still centralized compared to Bitcoin, meaning a few entities control a significant portion of the supply, which raises questions about decentralization and market manipulation. In practice, The choice between SWIFT and RippleNet often comes down to priorities. If a bank values security, familiarity, and wide acceptance, SWIFT remains the safe bet. If it prioritizes speed, cost efficiency, and cutting-edge technology, RippleNet offers compelling advantages. Interestingly, some institutions are experimenting with hybrid models, using SWIFT for legacy transactions while integrating RippleNet for high-volume, low-cost transfers, effectively hedging their operational risks. Now here's a surprising fact. Despite its decades of dominance, SWIFT itself has started to innovate. They are rolling out SWIFT GPI Global Payments Innovation, designed to speed up cross-border payments and improve transparency, bridging some of the gap that RippleNet has exploited. Yet even with GPI, full settlement still lags behind RippleNet's near-instant capabilities. Share your thoughts in the comments. Your perspective matters. Would you stick with the legacy giant or bet on the disruptive newcomer? And coming up, we'll explore adoption trends, real-world use cases, and what the future could hold for global money transfers. Adoption is where the story of SWIFT and RippleNet gets truly fascinating. SWIFT's network is ubiquitous. Nearly every bank in the world uses it in some form. Its deep integration into the global financial system means that for large value, corporate and interbank transactions, SWIFT is almost unavoidable. Even fintech companies building new payment solutions often rely on SWIFT rails for settlement and liquidity. Its resilience has been tested during crises, from financial downturns to geopolitical tensions, and it has rarely faltered. Yet, ubiquity doesn't guarantee efficiency. Speed, cost, and transparency remain pain points that RippleNet has specifically set out to solve. RippleNet, though younger, has seen remarkable traction in specific corridors. Institutions in Asia, the Middle East, and parts of Europe have adopted it to facilitate real-time cross-border transfers, reducing costs by up to 60% in some cases. Payment providers like MoneyGram and SBI Remit have experimented with RippleNet to provide faster remittances, particularly for corridors like the US to Mexico or Japan to the Philippines, where high volumes of consumer transfers demand efficiency. RippleNet's XRP token plays a crucial role here, acting as a bridge currency that removes the need for pre-funded accounts in destination countries, a system that traditionally ties up billions of dollars in liquidity. Potential future adoption hinges on regulatory clarity. Central banks and financial regulators are cautiously observing blockchain-based networks. While RippleNet has made strides by partnering with regulated institutions, SWIFT continues to leverage its reputation to assure governments and multinational corporations that compliance and risk controls are strong. Some experts predict that the future may not be an either-or scenario. Instead, we could see a complementary ecosystem, SWIFT maintaining its dominant interbank messaging network, while RippleNet or other blockchain solutions handle speed-sensitive, lower-cost transactions. Here's a little-known insight. RippleNet's technology allows programmable money. For example, an international invoice could automatically convert to the recipient's preferred currency, settle instantly, and even trigger notifications or smart contracts for auditing purposes, all within seconds. SWIFT GPI attempts to replicate some of these features, but the difference is in the underlying infrastructure. One is built on decades-old messaging protocols, the other on a blockchain foundation designed for transparency and automation from the ground up. Subscribe to stay updated on future deep dives like this. The landscape of cross-border payments is evolving faster than most people realize, and in our next segment, we'll explore the risks and opportunities of both networks, including the challenges that could redefine global money movement forever. As we move into the risks and opportunities, the contrast between SWIFT and RippleNet becomes even more pronounced. SWIFT's main strength, its reliability and universal adoption, is also a potential risk. Being the backbone of global finance makes it a prime target for cyber attacks and regulatory pressure. While SWIFT has an exceptional security record, breaches or outages can have massive ripple effects, pun intended, across economies. Additionally, SWIFT's dependence on correspondent banking means inefficiencies persist. High fees and slow settlement times continue to frustrate businesses and consumers alike, opening the door for disruptive alternatives. RippleNet, in contrast, offers speed, transparency, and reduced costs, but its relative youth introduces uncertainty. Regulatory scrutiny is ongoing. Questions around digital assets like XRP, money laundering, and compliance are yet to be fully resolved in many jurisdictions. Market volatility is another consideration. While XRP enables near-instant liquidity, its price fluctuations can create risks for institutions if not carefully managed. Moreover, the network's success relies heavily on adoption. The more banks and payment providers use it, the stronger its liquidity and reliability. Without broad adoption, RippleNet risks remaining a niche solution. Opportunities for both networks are equally compelling. SWIFT continues to innovate with its GP platform, which accelerates payments, increases transparency, and allows tracking of transactions almost in real time. RippleNet, meanwhile, opens doors for new financial products, cross-border e-commerce solutions, and even programmable remittances. For emerging markets, this can mean faster access to global funds, lower transaction costs, and financial inclusion for millions who are underserved by traditional banking. Here's a striking point. Some analysts predict that in 10 years, the line between legacy networks and blockchain-based solutions will blur. Banks could leverage hybrid systems using SWIFT for traditional high-value corporate transfers while employing RippleNet or similar networks for low-cost, high-frequency transactions. The real battleground isn't about who survives, but who integrates innovation without losing trust. Share your thoughts in the comments. Do you see a future dominated by blockchain networks like RippleNet, or will SWIFT adapt and maintain its iron grip on global finance? And in our final part, we'll reflect on what all of this means for the future of money, with a closing perspective that ties everything together and invites you to engage with the channel. As we wrap up this deep dive into SWIFT and RippleNet, it's clear that the future of cross-border transactions is neither black nor white. SWIFT remains the bedrock of international finance, trusted by banks, corporations, and governments alike. Its security, global reach, and decades of operational experience are unmatched. Yet, its slow settlement times and high costs highlight the limitations of legacy systems in a world that increasingly values speed, transparency, and efficiency. RippleNet, on the other hand, represents the promise of a new era. By combining blockchain technology with a bridge currency like XRP, it offers near-instant settlement, lower fees, and unprecedented transparency. Its adoption is growing, particularly in corridors with high remittance volumes. And its programmability opens doors to innovative financial products that were difficult or impossible to implement in traditional networks. However, regulatory uncertainty, adoption hurdles, and the inherent risks of digital assets remain challenges that cannot be ignored. Perhaps the most important takeaway is that the future may not be a winner-takes-all scenario. Instead, a hybrid ecosystem is likely to emerge, one where traditional networks like SWIFT coexist with blockchain-powered networks, such as RippleNet. Institutions may leverage the strengths of both: SWIFT for stability and global reach, RippleNet for speed, cost efficiency, and innovation. The evolution of money, in this sense, becomes a story of integration rather than replacement. If you've followed this journey, think about the implications for your own financial world. Faster remittances, lower fees, and programmable payments could reshape everything from international business to personal money transfers. The decisions banks make today will shape the future of global finance for decades to come. If this exploration sparked your curiosity, make sure to subscribe to stay updated on future deep dives. Hit that like button if you found this comparison insightful, and share your thoughts in the comments. Your perspective matters. Are you optimistic about blockchain solutions like RippleNet, or do you trust SWIFT to evolve with the times? Either way, the future of cross-border payments is an exciting story, and we're just beginning to see its first chapters unfold.